Good morning, everyone. I hope that you are doing well. Welcome to Lecture 2 of Zuzi Uncensored. I am recording this voiceover after the fact because I accidentally did not have my mic on whilst recording this. You can see me hover over the live chart whilst the market is printing, and it was just my fault that I did not manage to get my recording in. But as you can see, we traded above new all-time highs on Wednesday, and we then retraced on Thursday. We traded from the midnight opening price lower only, and the news at 8:30 was utilized to engineer buy-side equity relative to the Wednesday high, and therefore I was anticipating higher prices for the morning session on Nasdaq. The reason why I was focused on Nasdaq was because over or throughout the whole week, Nasdaq was the stronger market compared to ES, and therefore I was anticipating that those highs would get traded above on both ES, Nasdaq, and but also the Dow Jones. So here we are on the 50-minute chart, and what we can see is that I'm showcasing now every single liquidity pool that's important. That whole red box is one consolidation. We then saw manipulation to the downside occur, so that means I'm anticipating distribution to the upside to occur soon. What I want you to investigate is how we traded below the London low and how we saw signs of a potential reversal occurring on the lower time frames. I was initially looking for a potential long scenario to occur of this price range, this gray box, which was that 5-minute down close candle. But what we will see eventually is that the market did not manage to form a low here and then continue to the upside. Instead, what occurred is that we saw a reaction of that gray box. Don't get me wrong, we see the market react of it right here. However, there was no sign yet that we would in fact go long of here. Why not? Because there's nothing yet that confirms to me that there's something to trade, that there's something to long. Surely, my point of interest was this gray box. However, nothing compared or nothing confirmed to me, so to say, that there was a trade, and therefore I had to wait. And that's what you see me do here. I am simply waiting to see how the market is going to react off that gray box. And what you see here is that the market is trading lower aggressively into the low of that gray box. Eventually trading below it right here. And at that moment, I'm simply waiting to see and zooming out. But as outlined, buy side liquidity was still resting above all those relatively equal highs. And therefore, I was looking for those to get traded above. The CB that now got created inside of that gray box should function as an inversion value gap on price if price would displace above it. Notice that I don't turn bullish until we see displacement above that gray box and above that CB, that blue box. This voiceover is going to be as raw as possible, by the way. I will try to make no edits to still give it that very raw feeling. I've sped up the clip a bit. It's 2x relative to the normal speed, just to make sure that this recording doesn't get as long as the other lectures of the Zuzi Uncensored series will be, because they will be long and it's raw, but it's exactly what you need after going through the full model series and after basically saying, okay, I now see what is occurring. So now the market is trading inside of that CB's price range, and what I'm actively monitoring is whether or not we're going to displace above that price range. If we will displace above that price range, I will look for that price range to function as support on price, because look at that long wick from 8:30. That was a news wick. Notice my annotation of buy side liquidity is resting up here. Above that news liquidity, above that news high, buy side liquidity has been engineered. The reason why I'm annotating the low right there is because ES took out that low, whilst Nasdaq did not. What we're seeing here is we're seeing SMT relative to the previous 30-minute cycles low. Right now I'm simply waiting. I'm monitoring to see if the BC that is now getting created, whether or not it will function as support on price. If it will function on support as support on price, I'm anticipating higher prices to be the next strong liquidity. I'm still waiting because I don't want to go long inside this small gap just yet. I want to wait for confirmation of the low being in, and then I want to go long inside that inverse value gap. Just annotating the imbalance so that you know what price range I'm referring to. And here we're seeing signs of the market displacing above the inverse value gap. Went long right here, stop being below the close of the down close candle. The reason why I do not want to see the market drop lower again is because of the fact that we traded above the inversion value gap's price, or above the CB's price. Now I want to see that function as the inversion value gap on price. And I don't want to see price drop to the low end of that CB's price range again. At the moment when Nasdaq was trading right here, ES was trading already above the highs, and therefore I was not a big fan of the way that Nasdaq was basically rolling over again after trading above the CB. However, as long as my stop would not get hit, I would anticipate higher prices to come and big green candles to come. Everything looks like it is primed to expand higher towards the upside soon. When the market would trade above that high, the high that I just annotated, my stop will be drawn towards break even and the risk will basically be removed outside of this position. At the moment, I was not a fan of how long it was taking for the market to expand. So what I do is I then give it a timer. The timer being a way of me to say, okay, it has to expand within 3 minutes, for example, or within 5 minutes, or else I'm gonna go out of it. And that's why you can see me pay close attention to the close button as well of the position, because in my mind that's what I'm thinking, okay, it has to show signs of expanding soon, because if it doesn't, then it might not be the low just yet. But everything looked like it was being set up to expand to the upside very soon. But notice that every single time that the big green candle seemed to come, that the market would simply reject it, create a long wick and fall back into the CB's price range. That's something I'm not a fan of. Therefore, I decided not to pyramid yet or anything like that. Waiting patiently, I'm hovering over the candles and actually sharing this is what I'm looking for of this candle, etc. But unfortunately, the audio was not picked up properly, and it is what it is, so we gotta deal with it this way. At this moment, I'm giving it just 2 more minutes before it is allowed to basically stop, meaning I'm going to give it until the final candle of 1020, so until 1021. If it doesn't begin to expand soon, I know, okay, the time for it to expand has passed away, so now I should walk away. And what we're seeing here is we're finally seeing a close outside of that consolidation's price range. And now I'm monitoring to see if we're going to see the market continue this sign of strength. And right here, we're seeing the down close candle get created where the market is being repriced lower into the price range of that open to wick, open to low, I should say, of that previous candle that closed outside of the consolidation price range. And now I'm monitoring to see if we're going to find support in that price range or continue higher. If we would fall over again, roll over, then that would be my sign to get out. But what we're seeing is that the market is perfectly respecting that price range, and there we're finally seeing that expansion to the upside. The reason why the open to low of that big upclose candle is so important is because it is the opclose candle that displaced above the consolidation price range. Now the market is in close proximity to that annotated buy side liquidity pool. I want to see speed and velocity above that high, preferably with a clean run towards the buy side liquidity targets. Market takes out that high and retraces, annotating this BC. If the market would retrace into that BC, then it would be a potential pyramid for me. Market didn't seem like it was going to retrace. So in my mind I was already okay with, okay, it's either going to retrace and provide me with the opportunity to pyramid or just going to run higher. I was not a big fan of the slowness of the first two candles above that high. However, you gotta give it some room to breathe. You gotta give it some time. Price is now trading inside of the wick from the 8:30 news candle, which is a rather important wick, especially considering the size of it. If you look at that candle, it's of course very big, and therefore basically the quadrants can be applied to that wick. I did not annotate them, however, eventually you see me annotate CE. The next potential target, if the market would run higher, if it would expand within that distribution fractal like I outlined prior, before the setup took place, then we could potentially anticipate big opclose candles to come. I'm annotating the high of the previous 30-minute cycle, its respective candle, and that's that red box, that downclose candle. Notice that the BC that I wanted to pyramid of formed inside that downclose candle. At this point, my stop is already in profit, and it's simply a waiting game to see whether or not the market is going to deliver to the target or not. Stop is below the price range of that red box, and if the market would retrace into that BC, the pyramid option is still something that I'm monitoring. Preferably, I would like to see that occur. However, in my mind, I'm already okay with the fact that it might not occur, and then the market would just deliver to the target. And this is the most fun part in my opinion, where it's simply a waiting game, where it's simply you looking at the chart, knowing that the risk is already moved, and you can simply just observe the beauty of price action. Notice that this candle took out the high of that consolidation and is now showing signs of potentially retracing. Again, in my mind, all I'm looking for is whether or not we're going to see a retracement occur into that red box, deeper into it, so that will provide me with the opportunity to pyramid. If that retracement would not occur and we would expand, then all good. But for the majority of people, knowing when to remove risk is a rather big issue. Because the thing is, you need to understand implement to a level of, or to a degree, I should say, that you understand the importance of the levels that are being broken through. Because based on everything that I've been teaching you thus far within my mentorship, You should now understand that the moment that price displays is above certain ranges, should never fall back below that again. In this case, we traded above the previous 30-minute cycle's high, so you never want to see that down close candle get broken through again. Down close candle being, of course, the high of that time cycle. Because if that would occur, that would signal a change in state of delivery. If you look to the left side of this delivery prior to the news at 8:30, you could see that the high of that 30-minute cycle formed inside of old BCs. Now that the market is trading above them, you want to see those old BCs function as support on price. And right now the market is showing signs of potentially retracing into the BC. If that would occur, that's where it would pyramid. And taking the middle line, and notice that the market just fell short of trading into the imbalance. So in my mind, I'm still waiting to see if we're going to see a pyramid opportunity occur there. Might be wondering, why would you look to go long? Why would you look to pyramid if we just create a small CB there that the market just traded into? Because I know that the order flow is bullish and that we're drawn towards buy side liquidity. So on the lower time frames on another chart, I'm monitoring to see the signs of bullish order flow, and I saw them, and I pyramided perfectly inside of that BC. Time and price alignment was in place, so I was anticipating big green candles to come soon. Beautiful pyramid, beautiful add-on to the already existing position. Was long 3 contracts initially and then longed another 2. The market is now trading above that small little CB that got created. I want to see that get displaced above, and I want to see it function as support on price. The arrow is not something that's how how will I say it? It's not something that means that if I draw an arrow, that the market should always follow the arrow. However, I draw the arrow to showcase what I'm looking for. It's just a visual representation of what I'm monitoring. And it's the same with all these annotations. These annotations are, in my opinion, rather clean. There are not that many. However, what you need to understand is that all I'm looking for is I'm looking for the relationship between time and price. And based on that, I can basically gouge the order flow. And when I can gouge the order flow properly and I'm in sync, then I can draw such arrows and it's like, what the absolute F? How can the market trade into the price range where he draws the arrow from and literally draw towards the level where he has drawn the arrow towards? As you can see, I was annotating the price range of CE right there. Now I'm monitoring to see if the market is going to manage to stay above the low that formed inside that BC. Because if we would stay above that, then that would mean that we are going to see a big expansion to the upside soon. Because this would mean that it is an IOFED institutional order flow entry drill entry. And I want you to take a quick look to the left side of the curve as well and tell me whether or not you see something of interest there. patiently waiting, what occurs after consolidation, expansion to the upside in this case. If we would of course have a bearish bias and we would see the market consolidate, then it would mean that we would likely see the market draw lower. At this moment, I don't really care anymore because the market is already basically trading below or in close proximity to the targets, to the objectives. So it's simply a waiting game to see whether or not the targets will get delivered or if the market is just going to roll over and draw towards the stop, which is in profit. And here the market reaches CE of that long wick, and I was monitoring the direction of that price range. If the market would show signs of forming a high in that wick, then that means that I would take a partial, and that's what I decided to do here, especially considering the fact that ES was already trading in close proximity to the high of that 830 candle, whilst Nasdaq was not just yet. And that's of course something to be mindful of, especially when looking at taking profits. I would much rather be okay with taking solid profits than just basically trying to hold for the opposite side of the range, whilst there are potential signs present that could signal that we would fall back into the range. What I'm also paying attention to, and what I want you to pay attention to, and something I decided to wait with sharing because, look, I appreciate it if you're able to watch such a lecture all the way to about 22 minutes in right now. The majority of people, trust me or not, they don't have the patience to do so. They want to have everything now. And it's just the way society has been built up, where everything is so accessible from your phone, where everything can be basically seen within the instance of a click. People are getting lazy and people want everything right now. And in this business, that's the mindset that doesn't work. The mindset that works in this game is completely the opposite. You need to be very patient, waiting for specific things to occur at the right times, and during those times you wait for X, Y, and Z to occur. And therefore, I am also just training you to think that way. In order to to basically train you to think that way, I need to make sure that I teach you patience, and you get taught patience by having to listen to these lectures. And I'm balancing it, meaning I'm not spoon feeding you, but I'm also not just dragging stuff out and make it too hard to follow. I believe that such a lecture is very beneficial because you have insight to basically the way that I am able to do what I'm doing consistently every single week, taking out real money from the marketplace. Because as you can see, this is an AMP live account, which is a regulated US broker. This does not mean that you'll be able to go out there and do this yourself. I'm not a financial advisor. Nothing that I say or share within this mentorship is meant for financial advice. Everything is meant for educational and or entertainment purposes only. This is of course part of the full risk disclaimer that you have agreed upon when joining my mentorship. But anyhow, now that we got that out of the way, maybe that short little rant caused some of you to click off. At this moment, prices above the midnight opening price, so I took another partial and monitoring to see if we will draw towards that final high. The high being the basically the high of the previous day, which is a solid target. I'm monitoring to see if this BC, which formed just above CE of that news candle's wick, will function as support on price. If it will, I'm anticipating higher prices. If we would displace below it, I would take another partial. But back to what I was going to say and share with you. I want you to take a look on the right side of the chart where you see the prices. I want you to see how every single level that is of importance to us, so range low, equilibrium, range high, got or functioned as support on price every single time that the market is placed above them. And when you understand that logic and you're able to see it, it makes sense why at specific times certain lows such as liquidity runs take place. Because then you're able to see, okay, we move from this level to that level to that level to that level, etc. And you can, for example, use a 25, 50, and 75% to gauge the order flow. And every single time the market is failing to displace through such a level, we know that we might need to give it some more time before it is allowed to expand to the upside. But if it would really displace above levels of importance, then that means to us that we need to be very cautious of the current market environment, and therefore we might need to take another partial. That's what you're seeing me apply right here, where we are of course now above 18,725, so I would never want to see the market displace below that again. Notice that 18,725, which is the lower quadrant of the range of 18,700 to 18,800, lines up with CE of that Newsweek random. Time distortion is taking place inside this BC. The market is consolidating, and I like to see that because I know that they're engineering bias at liquidity, and that can be attacked. So as you can see, I'm hovering over the close button or the sell button to take another partial. After this, I had to make a move because I wanted to go outside and meet up with some people. So I did not close my full position because I thought maybe we can see another run higher. And we eventually saw another run higher, but I decided to simply just to take another partial around midway of that range, and that was that. Eventually, the final position got stopped at around, it was better than break even. With that, this lecture comes to an end. I hope that you found it insightful, and I look forward to speaking with you in the next one. Be safe.